Welcome, everyone, to this webinar here from the campus of the University of Illinois. It's entitled Updated Supply, Demand, Price Prospects for Corn and Soybeans after the release of the USDA reports earlier today. So we're updating all of our balance sheets, and we'll be walking through those with you and then giving you some time for questions. We wanted to let you know about the materials for the webinar. The slides that we're about ready to go through are available on the lower right of your console for the webinar. The PDF of the slides will also be available soon at the farmdoc site for webinars, and the video will be up there late today or tomorrow so that you can look at the entire video during the for this presentation, the Q&A. We also, as usual, request that you submit questions during the presentation and during our Q&A period. All right, let's get right into it. Well, big USDA August crop report released at 11 a.m. Central, noon Eastern time, so just a couple hours ago. Our estimate of trend yield for corn in 2018, 171.4 bushels an acre. The average trade guess going into this morning's report was 176.2. And Todd, the USDA surprised everybody, coming in at 178.4 bushels an acre, continuing our run of very good crops in recent years. So what does that USDA number look like in terms of deviations from our trend estimate? So that would be 7 bushels above our trend estimate for 2018, if that is the final yield. And you can see we have the deviations trend on this chart going back to 1991. And again, it's a great chart to illustrate just how good the weather has been the last 5 years. You see 5 consecutive years where yields have been either above or well above trend. So we've continued in 2018 a remarkable run of good weather here in the U.S. Corn Belt. But it is interesting, even though 178.4 is a big number, Todd.
Yeah.
It's, in historical terms, as a deviation from trend yields, it's a little scary. It's nowhere near as big as we've seen the biggest monster crop trend deviations in the past. And in fact, it's only ranks as the 4th largest out of the 5 trend deviations since 2014. So again, a good, solid, even a very good corn crop, but you couldn't really call the yield a monster yield. And that kind of summarizes the overall perspective on the corn yield.
Right. I mean, it feels like a monster today, but putting in perspective, it's, the 4th out of the last 5 years deviation from trend.
Yeah, and so it's good to keep that in perspective. And I think that we're going to see that, with growth in consumption, that it's certainly not a catastrophically large yield, even if it comes out in the end that big or even a little bigger.
That's right.
So let's talk a little bit more about those USDA numbers for yield. Of course, the number here that jumps out is a big 207 for Illinois. That's really a phenomenal yield. And in general, you see record yields in the Eastern Corn Belt, 207 for Illinois, 186 for Indiana, 180 for Ohio's a new record yield, and 174 a new record yield for Tennessee, and also South Dakota as a new record yield. And so you see the distribution of either no change is the prediction for Iowa, and those blue states where the yields are bigger than last year. You see kind of right through the heart of the Corn Belt is where those big yields are occurring. And it is also kind of interesting. You see a lot of states where the corn yield is down compared to last year, like Missouri, where it's been very dry. It's off by 39 bushels. Kansas is off by 3 bushels. We thought it might be down a little bit more than that based on conditions and reports we've been hearing. So you see a lot of states where there's where the yield is down compared to a year ago. But in the states where we produce most of the corn, yields are very good. And that's why we have why we have a forecast of a record yield. I did want to also take just a couple minutes and talk about the USDA's methodology that they use. This was their first survey-based estimate to estimate yields, and that they do 2 kinds of surveys. And one is what's called a farm operator survey. So they just ask farmers what their yields are. And the second is the objective yield survey, where they send enumerators out into a much smaller subset of the fields across corn producing areas in the U.S. They're called the so-called speculative states, and take measurements. And so then they get all this data, and for all practical purposes, they average the 2 yield indications, take into account any bias that those indications have had in the past, and voila, you get their yield estimates. One more point that we think is really important this year is that the USDA always, they've done this forever, the estimate is as of August 1st observations. It says as of conditions on August 1st. So that means what was observed in both of their samples. So that means if weather the last 10 days or 2 weeks after the report has been issued is less than stellar, then you would probably expect yields to drop, and vice versa. If weather in August is really good, you would predict the USDA number would go up, because it's based on observation and conditions as of August 1st. Now, it's important not to confuse that statement with the USDA bases their forecast on crop conditions. The ratings themselves, they might take a look at those, but this is a survey-based estimate with an as-of date of August 1st. And so that'll inform some of our estimates as we go forward. Did you want to add anything there, Todd?
No, I mean, that's an important qualifier on this yield number, I think, particularly this year. Like what we saw last year, they were a little low in August, but we had the cool weather, cool weather all through August.
Right.
So I think that might be particularly important this year.
All right. So that's just a little bit about USDA procedures, and you'll see how that informs our estimates going forward. So the average trade guess on total production was 14.411 billion bushels. And of course, with the larger yields, acreage the same, we see that the USDA came out at 14.586. So we have a little over 170 million bushels extra compared to what was expected. So this shows the history of the surprises, which is the USDA August corn production minus the average trade guess. And a positive number means that the trade guess was lower than the USDA. So not only have we had good yields and good weather, Todd, in the last 4 or 5 years, that's led to the trade guesses in August being below what the USDA estimated. And this was the 4th one in a row like that. It's not a huge surprise. It's 175 million bushels of extra supply. It's certainly not anywhere near the level of the surprises that we saw in 2015 and 16. But it, again, is a bearish surprise in that sense. And it's been 5 years since the USDA's been below what the market expected. One final bit of perspective is the final USDA U.S. corn yield minus the August forecast always bears repeating. that there can be a lot of change from the August 1 USDA estimate to the final. Last year, as you mentioned, Todd, the yield went up 7.1 bushels. Before that, we saw some small drops and then some larger ones a few years ago. So you can see that it's not at all unusual for the final yield to differ by 3-4 bushels from what was released in August, and it can be, like last year, even more. So that's really important to remember.
That's right.
And we would argue there's really no obvious pattern to predict which way it's going to go. Obviously, everybody would like to know that in real time, but I don't think there's anything really obvious. If you look at this this year, we have an opinion, but not just based on looking at the pattern.
No, not at all.
So we see here's the pattern on harvested acres minus the harvested acres forecast in August. Now there is an interesting pattern where we do see the where we do see a tendency for a drop to those final harvested acres. Not really sure where that's there, but
yeah, no, we've seen that with the June acreage report as well. We tend over the last few years, they usually keep the June acreage number in August, depending on the weather and what we see in the Midwest. We tend to have lost some corn acreage as the year's gone on. I'm not sure that's going to happen this year. But that has been a case.
That's right. You know, so if you looked at these numbers, you might not be a bad expectation to say when we get that January report, we might lose 500,000 acres of corn.
Yeah.
Okay, let's now turn to the use side. We're going to look at starting with the pattern for ethanol with ethanol production. We see basically the USDA's forecast is 5.6 billion bushels, and we only have 2 months to go in terms of data for the 17-18 numbers. And the purple bars show what we need to do to get to that USDA's 5,600. And looking at all the data, we think that that's more than likely that
they're going to hit that. I mean, those last 2 months are just split on what's remaining. Right. I mean, we've got production numbers through last week. They're going to do 55.6 for sure.
Yep. Exports, obviously trade. It's continues to fascinate me, Todd, given all the concerns about trade, very legitimate. We'll walk through those. Just how good corn exports continue to remain. USDA's latest projection for 17-18 is 2.4 billion. The total to date is just under 2.2. And what we need per week to get to the USDA's 2.4 is 50.4 million bushels per week. And we've been doing more than that. So the USDA's 2.4 seems really realistic for the current marketing year as it's ending. Feed and residual is the one place where we see some weakness. To reach the USDA's 54.50, we need to see feed and residual use in the last fourth quarter to be 754. We think that's a little optimistic based on, in particular, what we saw in the last couple of stocks reports. Yeah. So a quick run through of balance sheets. We're going to go through first the 17-18 old crop balance sheet. The first column shows the 17-18 August WASDE numbers that were just released today. And then on the right are our estimates with any changes from the differences from the USDA WASDE highlighted in red. And the only number I want to highlight is feed and residual use. We're knocking our estimate for the current marketing year down another 25 million bushels to 54.25. which gives us ending stocks of 2042, just slightly more than the USDA's number, obviously exactly 25 million bushels higher, and we're not changing our price. So very little change on the old crop balance sheets. Of course, what all the focus and attention is on is the new crop balance sheet for 2018-19. The first column shows the estimates in this morning's August WASDE report. And if you go down to the bottom line, they have ending stocks at 1684, and that gives them ending stocks to total consumption of 11.2%, and the midpoint of their price range is 360. So those are the baselines. And so like in our last webinar a month ago, rather unusual set of circumstances, we're going to present what we call a no trade issue balance sheet for corn, and then a trade issue balance sheet for corn for 18-19. So let's start in the middle column, which is what we call our no trade issues, or you could say maybe all trade issues resolved, Todd, balance sheet.
Or just no problems with trade.
Just no problems. Now, first off, notice on the supply side that we are fading the USDA's 178.4 on corn yield to 176. That 176 continues to be right at where crop conditions ratings would forecast. It looks to us like we're not finishing the 2018 growing season really strong. And so you can see our bias is to slightly lower final corn yields than what the USDA projected today. We'll have to see. So that gives us slightly lower total supply. You can see at 16,494. The real action, of course, is on the consumption side. And for feed and residual, you'll see that even with no trade, Todd and I continue to be a bit more bearish than the USDA. We're at 54.50 for feed and residual next year. We just don't see a trend yet, solid evidence that justifies a jump in feed and residual use going into the new crop year. On ethanol, we are showing just a slight, small increase of 56.30 compared to the USDA's 56.25. Todd and I continue to do research, and right now we would say that the small refinery exemptions, which we talked about last month, if they're having some negative demand for domestic ethanol use, it's limited, if any, given the most latest data. And for exports, we're at 23.10, so we're coming off of the 2,400 for last year, and we're just a little bit more bearish than the USDA. You put it all together, our no trade issue balance sheet is 1609 for ending stocks, so not really very different than where the USDA is at. But probably the key difference is we're probably a little bit, probably maybe a lot more bullish on corn prices if we get that scenario. So our average price in that no trade problem column is 390. Trade issues, the last column, that's obviously hard to pin down, but our best thinking, and it's important to distinguish when we say trade issues for corn, we're talking about trade problems with NAFTA primarily. There is a place where that comes into play. So with trade issues, we're looking at feed and residual dropping another 50 million bushels to reflect the impact of the trade problems in livestock. Ethanol, we were coming in at 55.75 because the trade problems, there's a place where China trade problems do come into the trade issue balance sheet, because that reflects our assumption of lower export potential to China, kind of lost potential that we see in the upcoming year for ethanol exports that wouldn't be there. And of course, with the potential problems with Canada and Mexico, in that scenario, we see a pretty good hit on corn exports down to 2070. The net is that trade problem scenario would give us ending stocks of 1954, ending stocks to consumption ratio of 13.4%, and a 30-cent hit on prices down to 360. So that's the corn situation. Todd, why don't you take it away for soybeans? Hopefully, I haven't taken all your time.
That's all right. We got this basis.
Oh, that's right. Just a couple slides on basis. Got ahead of myself. With the big crop prospects, we've been seeing basis widening out recently, and I expect that that's where we're going to remain. This is the new crop basis for South Central Illinois. We're going to probably see it in the mid-30s, hanging out there through harvest now. Although, and there is a reasonably good carry in the futures structure, so that something to think about in terms of marketing strategy. On farm storage, the market is certainly projecting that will pay out into the spring months. So now turn it into soybeans, Todd. All right, got ahead of myself. I got too excited about soybeans.
That was exciting. Yeah, this is exciting. So the USDA's yield number was 51.6 this morning, a full 2 bushels above the average trade guess of 49.6. As we've been doing the last few webinars, we've been using a quadratic trend for a variety of reasons. I don't want to get into the details of that. Go back 2 webinars and we had a detailed discussion on this. But our trend yield was 48.5. So that 51.6 is quite a large number. I think there was a lot of people who thought the number would be big. I'm sort of feeling like the trade in a lot of ways with my yield number. And I think the trade was guessing what USDA would do. So this was a very bearish factor in the market. And I think prices are reflecting that right now. When we look at trend deviations, now these are deviations from the quadratic trend. So this year, the 2018 was a 3.1 deviation. Much like in corn, we've seen 5 straight years of above quadratic trend deviation.
Just to add one comment there, Todd, it is interesting that if that yield verifies relative to trend and relative to history, the USDA is saying the soybean crop is better than the corn crop.
Yes.
It's the second largest in the last 5 years.
Yep. Yeah, it's a big crop. There's no doubt about it if that number hits. So when we look at soybean yield by state, much like in corn, the Eastern Corn Belt is projecting huge soybean yields. The records in Illinois, Indiana, and Ohio, and Pennsylvania for that matter. And even out in the Northern Plains, we're seeing really good yields relative to last year. Most of them above 3 bushels when you get in the Northern Plains, and Nebraska putting down 61 bushels an acre. As expected, Missouri's down. I thought it might be a little lower than that for Missouri. From the reports I've heard, they've been having a rough year. But overall, as of August 1st, and their surveys that you discussed in the corn slide, we're looking at a big soybean crop if these numbers hold.
Just one comment I make is, look at the Mid-South and South. Despite some real struggles early on in their growing conditions, look like, another, massive soybean crop out of the South.
I'm a little bit surprised by the Mississippi and Arkansas number, and Alabama for that matter, based on the weather they were getting earlier this year. But bless them. U.S. soybean production, the USDA has about 4.6 billion bushels. The trade guess was a little above 4.4. This is the biggest crop we've done, period. If this yield number holds, that's a lot of soybeans. When we start thinking about U.S. soybean production in conjunction with what happened in Brazil this year and the prospects for production in South America moving into next year, you would expect probably another 20 million metric tons. I doubt Argentina does another drought, and Brazil's projected to do a record crop. We could see a 2019 where there's a lot of soybeans floating around in the world on top of the trade issues. The USDA August soybean production forecast minus the average trade guess. When we say average trade guess, we're talking about what the trade thought the number would be. We had a question from Twitter. What the trade thought the yield would be, or what the trade thought the production number would be. So we're taking what USDA's August number said and subtracting out what the trade said. Once again, this is a big difference. It's much like last year, 179 million bushels, well above what the trade thought would be there. And this is, 4 years in a row, it's been a big miss from the trade, and actually for me as well. So don't feel bad, trade. I've been there with you.
I'm raising my hand too, Todd.
Okay. So you're not alone. When we look at the final U.S. soybean yield minus the August forecast, over the last few years, we've seen it grow as the year went along, basically. But last year it didn't. It regressed a little bit. And much like in corn, there's no rhyme or reason. It's just interesting to look at how often it changes. We all know August weather's key to the soybean yield, and I think this year, it's going to be key again, very key. So we'll see how it goes as we move through the month. We'll look at harvested acres of soybeans minus the August forecast. Last year, we got a little bit more acreage in soybeans from the June acreage report. Over the last few years, the harvest acreage has been down as well. So I don't think this year we're going to see a lot of change in that harvested acreage number. The weather's been pretty good. There hasn't been a lot of flooding. I don't see, maybe Missouri will walk away from, I don't think there's been a bunch of prevent plants. So I think this number is going to be pretty close to where we're at. I don't know if you have an opinion on that, Scott, but.
Yeah, I agree.
Right now, the USDA for 17-18 is projecting 2.11 billion bushels. After the trade kerfluffle that blew up in June, I was highly skeptical that we would hit this kind of number in soybean exports. We did see a lot of what I've been calling bargain buying when soybean prices lost 20% of their value. We've seen a real pickup in places like the Netherlands. Strange places like Pakistan are coming in. So there's been a lot of buying across the board. I think the big question for soybean exports as we move into the next marketing year is, will that continue? It's an open question. I'm not quite certain. But right now, to date, we're sitting a little above 2 billion bushels. We need about 24 million bushels a week. Recently, we've been doing almost 28. I think we're probably going to get really close to 2.11 billion bushels. So I recently changed my projections on that as well. Crush has been outstanding the second half of the year. Since we saw the drought in Argentina in February, crush has taken off. We've been crushing at an unbelievable rate. USDA raised it to 2.04 billion bushels. I was there as well. I think that's a good number for crush this year. What you're seeing here is what we would need to do in the last 2 months from the crush report. We only have the crush report through the oilseed crush through June. Easily, I think we're going to hit that number. It'll be close, but I think we're going to hit that number based on some of the crush margin we've seen and how cheap soybean prices are. So I think when we look at the 17-18 balance sheet, we're basically where the USDA is. There might be a little bit of hedging there, one way or another, but about 430 million bushels. Ending stocks, 10% stocks to use. The average farm price of $9.35. I think we're going to be really close to that. What is a quick, we got a question here. I'll just go ahead and field it. What's soybean crush? You take soybeans and you turn them into soybean meal, soybean oil, about 11 pounds of oil.
By literally crushing them.
By literally crush. And then some holes.
Smash them and squeeze the oil out.
Yeah. And then you get meal that we feed to livestock. I guess some people eat tofu. I'm not one of those people, but whatever. Hope that answered your question. Moving forward, this is the one everybody's concerned about. I think the 18-19 soybean balance sheets. I'm going to start in the supply area. Well, we're fading, USDA a little bit on this yield number. They have it at 51.6. With our crop condition report number and some of the weather we've seen recently, we got it at 50.3 nationally. Now that number could be, the USDA number could be right, but I've been at about 50.3 for 3 weeks in my models. It hasn't really been moving very much. We've seen some stuff dry out. Now there's a lot of reports of excellent soybean crop, especially here in Illinois. I feel like we're in a garden spot here, so it's easy to get biased. But that puts our total production about 100 million bushels down from where USDA is, so our supply is slightly above 5 billion bushels. The consumption number is the key, and like Scott said, we got the August WASDE number in the first column, then we've got a no trade issues consumption level, and then a trade issues. Now, when we're talking about trade issues with soybeans, we're talking about the China issue, 25% tariff, and the trade battle we've been seeing going on. Taking the no trade issue. If we somehow resolve this at some point in time, and then before we get to harvest and we move strongly into the next marketing year, I think you'll see soybean exports explode. In my mind, any kind of deal with China implicitly means they're going to take a chunk of U.S. soybeans. We got it at 2.25 billion bushels. I think that might be a little bit conservative when you think about what would happen if China came back in the market. That's where I'm at. With that, I think you would see the price take off and the crush margin would change. We would probably crush a little less. That's my opinion. I think Scott's in there too with that. So our total consumption would be about 4.37 billion bushels, putting ending stocks at 551, with a 12.6 stocks to use, and an average farm price around 950. Here in Illinois, that would be quite a bit higher than that, I think, depending on where we're at. The trade issue side, so basically where we sit now. Crush has been strong. The crush margins have been really good. They've benefited from Argentina sort of disappearing from the market. I don't think that will continue all through next year if Argentina has a decent crop and gets back in the crush game in a strong way. I still see us doing pretty good crush. I'm just a little bit more bearish than USDA is on what Argentina will do, I think, and the demand for it across the board, depending on where the prices are. I've put export at 2 billion bushels. There's a lot of uncertainty around this number. Like I was saying, when I was looking at the 17-18 export projection estimates, will we continue to see non-Chinese markets take the kind of soybeans we saw in June and maybe into some in July? Will that continue through the whole year? I'm skeptical that that's the case. I just don't see there being enough excess demand in those other markets for the kind of soybeans China normally takes. So we're a little bit down at 2 billion bushels, which puts us at a total consumption of near 4.2 billion, which puts our ending stocks pretty close to where USDA is, almost 18% stocks to use and about an 890 price. So while we differ a little bit from the USDA on where crush and exports will be, and we have a different yield number, a strong yield, I think we could see record ending stocks to use in 18-19 if we continue to struggle under these trade issues. It's a real problem for us right now in the soybean market. You got anything to add to that?
It's a little hard. I would just add on the trade side, and we're talking quantities. We can move the 2 billion. I don't think any problem. It's just a question of price. The way I look at it is we might require a lower price than 890. And I think that's what we're revealing in what we're seeing. Buyers will come out if they perceive soybeans to be at bargain levels for the in particular the animal the protein for animal feed diets.
Yeah, I sort of think about it the same way. USDA's got a 2.06 billion bushels, 890. If we see strong exports start occurring in other areas, I think you'll see prices go up, and I think they'll pull back from it. So that's what I'm thinking. It will limit our total exports under this kind of trade scenario. So yeah, I agree with that in a lot of ways. So I mean, that's where we're at. There's a lot of uncertainty in trade right now for soybeans.
And I just say, it is important to keep in mind that if we do have a soybean yield of 51, 52 bushels an acre. And if we're a little too optimistic on the export side, that it's not hard to build a balance sheet under trade problems where the ending stocks for soybeans goes over 800 million bushels.
No, it's easy to build that, but
Yeah.
it's sadly so easy to think that way. Particularly, what are the odds Argentina has another drought?
Yeah.
They were 20 million metric tons down last year, and Brazil is expanding acreage and looking like they're going to do 120.5, million metric tons, or record production for them. It's just not a good scenario right now. All right, soybean basis. So these are South Central Illinois basis price. And you've seen it we were moving along at around mid-30s, between mid-30s and 40. And we've really weakened in below 40, and we saw a drop off briefly. And I think we're going to see the weakness there in the 45 to 50 range. This gets back to one of your favorite topics, Scott, the idea of convergence.
Yes.
Are we starting to see convergence issues creep into the soybean market with these huge supply numbers in place? And I'll talk about the carry here in a second. There's carry in the soybean market just like last year, something we haven't seen that kind of carry in the last decade, really, in soybeans at that kind of level.
It's been a while.
Yeah. Are we starting to see convergence issues with the basis taking up the issue with the carry part of it? There's a signal to store, and the basis is sort of reflecting that kind of idea. Do you have anything to?
Yeah, I would just add that just to caution our listeners, this is an unusual situation where you look at a chart like this, and yes, basis is weakening, but it's not all literally due to the fundamentals like you might ordinarily assume. Some of it has to do with just a technicality in the way the grain futures contracts are designed, so that they have a fixed storage rate of roughly 5 cents per month. And if market conditions with a huge crop that has to get stored, indicating that you need to reward storers at more than 5 cents a month, that extra above 5 cents a month has to show up in the basis. And so this makes this kind of circumstance tricky to analyze.
Yeah, and with what looks like a record corn crop maybe, and a large spring wheat crop, storage is going to be at a premium this fall.
Yeah.
These are soybean has a bit of a carry. I don't think it's not full carry, and these prices are probably 40 cents lower after today's report shift everything down. But like Scott said, there is a carry there for on-farm storage, but overall, shift that whole thing down significantly, which is sad to say.
All right, we're ready for questions.
We're going to do this.
All right, we haven't used up all of our time, so I'll start with the last one. So your position is only China trade will result in good bean prices. All other trade results in depressing prices.
No, that's not the position.
No, not exactly.
What I'm saying is, like, the loss of the China trade hurts we're seeing that. Like, the kind of wedge we've seen between Brazilian export prices and our export prices is, and with storage in China, you're like $65 per metric ton. What we're saying is we need these other areas to come in strong to make up the difference in what we normally send to China. And I'm not seeing that. I'm not sure this fall that will be the case, especially with the kind of crop we saw in Brazil. Yes, China's sourcing a lot of beans out of Brazil. Yes, in June and through July, we saw a lot of places that up their imports of our beans year over year that normally aren't there. We need that to continue, for sure. So that's not exactly what we're saying. If, for instance, the rest of the world does make up the difference, I think you'll see soybean prices strengthen. But what Scott and I were talking about earlier, and maybe we weren't clear enough, if soybean prices start strengthening, we think a lot of those people will pull back. It's sort of a bargain buying scenario.
Mm-hmm. All right. Well, we have to hit this, Todd. A question has come up about the USDA's $12 billion trade package. How is it going to be used? we don't, probably know a lot more than anybody else, but it is, as we understand it, there'll be a trade loss. There is already a trade loss calculation that may change depending on the negotiations with China. And it'll be a separate 1-year program that you have to sign up with at your FSA office. And based on your qualifying yields, you'll be eligible for a per bushel payment for estimated trade losses. And they're saying that will be for corn, soybeans, wheat, dairy, and hogs. It's easier for me to see how that calculation would be made for the crops. So we're hearing a lot of wide variation in what that payment rate might be for soybeans. I think you could probably bound the payment rate for soybeans between 50 cents and $1.50. It's probably going to be substantial, and then it'll be smaller for the other crops. And that's about what we know. Anything you want to add?
No, I have no idea what they're going to do. I'm not sure they do. But it would be nice for us in Illinois if we got some, our farmers here in Illinois. It seems to be still up in the air. I would love it if they would just resolve the trade issue. We could call it a wash and walk away from it. I don't see that happening, though.
Right. So that's what we know about the trade assistance. There's a calculation of a loss rate in dollars per bushel for the crops, and that will presumably be applied to 2018 production that is verified with the FSA.
Yeah,
that's pretty much what we know at this point.
I got the estimated price on the balance sheet reflects farm price versus futures, correct? That is correct. And it's the seasonal average farm price. So the farm price is weighted by the marketing per year for corn and soybeans. Usually in Illinois, our prices for corn and soybeans, for corn, we're, depending on where you're at, 10 cents higher than that. 5 to 10. Soybeans, a little bit higher than that. So you can figure here in Illinois, we're say a dime higher than what we're showing for the seasonal average farm price. Much of the crops marketed in around harvest and in January, so there's heavy weights on those 2 months normally. So yes, it is the farm price.
Right. Good question here. It says on corn, how do you decide which of your demand curves to use in your average price figure? This questioner is talking about a stocks to use and corn price model that Daryl Good and I came up with a couple years ago, and I think Todd and I have used it in our previous webinars. Our corn forecasts are basically equal to an average of the weak and moderate one. Am I speaking out of turn there, Todd?
I wish I had an hour to talk about this thing you and Daryl did. I've spent a significant amount of time trying to estimate models that reflect what Scott and Daryl can. And I'm getting close. I hope Daryl's listening. I'm getting close, Daryl. Yeah, when you think about the demand curves, one of the issues with them, we've seen strong demand, right? But we're in this weird place right now where we have these trade issues that are depressing soybean prices and sort of carrying things down. So yeah, weak to moderate, somewhere in that range would probably be the right figure. But yeah, it's a great model. It's just a sort of strange little thing. Yeah.
And you have to use it, you have to pick.
You have to pick.
You have to pick. And so that's kind of where we're at. So admittedly, it's pretty subjective because you have to make that choice. Do you have any early expectations for possible crop rotation for 1920? Yeah, Todd and I have certainly been pondering that. We see a scenario developing, basically particularly under the trade problem scenario of substantial oversupply of soybeans now, plus an expansion in South American production, so that we may have a need to throttle back soybean acreage in the U.S. next spring a lot.
Yeah, I've got a nightmare scenario I keep going over in my mind where...
Man, you are just a lot of fun today. Did you get up on the wrong side of the bed?
No, well, that yield forecast really bummed me out for corn. But, if we continue this trade issue with China and soybean prices continue to be depressed despite the 12 billion, whatever that happens. And I do think corn price will strengthen through the winter months with the kind of demand we've seen at the kind of prices they're at. If we can get some decent corn prices moving in, I could very easily see us going in the corn belt pillar to post corn planting next year. So there's another question here about, do you expect any differences in old or new crop farmer marketing this year due to the trade wars? I would definitely be paying attention about marketing early this year on both the corn and soybean side when we get into that winter months and we start seeing what South American production is doing in soybeans. Any kind of rally there might be a good place to post. And before we get to the March prospective plantings report, especially if we're thinking about adding another 5 to 6 million acres of corn, right, or 4 to 5, that would just sort of way over the corn price for the last half of the market year. That's the worst case scenario. And then we're in this place where soybean prices are still depressed and corn prices are still depressed. I don't want that to be the case, but that is the nightmare scenario.
Let's see, any correlation to crop maturity being 2 to 3 weeks ahead of normal and USDA estimation accuracy? Not that I know of. I haven't actually done that kind of analysis, so I can't say for sure. But I would be surprised if you can predict USDA forecast revisions on corn and soybean yields based on the maturity of the crop. It makes common sense given that the USDA estimation system has an as-of date of August 1st, as I said earlier. So if conditions are worse or better than normal in August, then you ought to at least partially be able to predict the changes in USDA corn yield forecasts. And that makes sense. And you can show that it does work that way.
No. Is there any reason China would be using the trade war to reconfigure supply lines to push corn production in the Northern Hemisphere and soybean production in South America domestically and in Eurasia? Well, this is a good question. I know Scott and I have talked about this a lot. I've been focused on it quite a bit since the trade war started because I was worrying long-term, is this another 70s grain embargo issue and are we going to see a rise? I think from everything I've heard and people I've talked to and looking at the data, I don't see China doing a boom domestically in soybean production. I think they're about where they're going to be for the foreseeable future based on the technology bundle they have and the farm size they have. But the idea that they're starting to cultivate soybean growth in the Black Sea region and in Russia and other places is a real thing, I think. If we start seeing a growth in production in Ukraine, former Soviet Union, and other places that sort of fit in with their Belt Road Initiative in the first place, we could be looking back in a few years and regretting this fight. That's how I see it. Scott, you might have a different take on that.
No, I don't. I got a question that came in. What do we know about trends related to the ear weight and population changes in September and October crop production reports? This month's is a record setter on both accounts. Let's see, ear weight. Well, I only looked at the chart. I don't believe the ear weight is a record, is it, Todd?
It's below last year, but the population count's huge.
Is huge. So we see very high ear weights and population. Of course, it's always important to emphasize and remember that the ear weights are a very funny number that come out of those USDA corn production reports. They get a lot of attention. They're a hybrid number based on both the farm operator reported yields and the objective yields. A lot of confusion on that. So you have to interpret them very, very cautiously. But obviously, we have high yields, so we have high population and high ear weights. Will that be maintained? I don't know. And I haven't found any way to extract out of the initial ear weights and population numbers a prediction of which direction the USDA revisions will go. I obviously prefer to just focus on the weather in August and predict that for the way those revisions may change.
Yeah, and I mean, that ear weight number is pretty large considering the amount of tip back I've heard about throughout the Corn Belt. And it's not just in places that have had trouble. You've heard I don't know if you have, I've heard of 1 to 2 inches in a lot of places in Illinois, Iowa, Indiana. The rounds aren't what people think they are. We'll see in September with the next one. I think there'll be some clarification on that ear weight number.
Right. Interesting question. It says, in the worst case, how low can November beans go? Can we end up, I presume you mean futures. Can we end up below $8 this fall for November futures prices 2018? So let's just stop there, and then we'll pick up the rest of this questioner's questions. So what do you think, Todd?
Could we get below there? Yeah, we might get below there today, the way the market's going. But I don't think.
Stop.
I don't think the yield is there at 51.3. So I don't think we're going to go that low. I think as we move through August, get the next crop production report, maybe some moderation in the yield. But if the yield is there, I think after this initial down run today, we'll probably see a little bit of bounce back or, some kind of rationality moving back in the market. I don't think we'll end up below 8 on November beans. I really don't. What do you think?
Well, I would answer it this way. If Todd and I are wrong about the bean yields, what if it's 52?
Yes.
Or 52 and a half?
And you're saying I'm the one being negative. Here you are talking 52 and a half.
Well, I'm just saying that if that would happen, then we could end up below $8.
Yeah,
It would just be potentially a nightmare scenario on ending stocks with a really huge soybean yield and a ratcheting up of the trade problems. It could happen.
Yeah.
I think that the odds of both of those occurring together are low, but it could happen. Related question. Oh, someone said soybeans finished 42 cents lower. So ugly day in the markets.
Yeah, horrible.
Says, do you think we'll look back in a few years and decide 2014 was the beginning of a new era of higher yields or accelerating trend? Or are the recent big crops just due to a streak of favorable weather? Well, that's one of Todd and I's favorite topics.
It is.
I think that the number one factor is good weather. I mean, I think that that's really undisputable that on average across wide areas the last 5 years, we just haven't had a big stressful drought that affects a large area of the Corn Belt. So we've been very fortunate to have that kind of weather the last 5 years. But that doesn't mean that trend yields at the same time could not be accelerating. And you'll notice in soybeans that we do incorporate directly into our trend modeling the idea of an acceleration in the trend yields. So on soybeans, the answer is definitely yes, although we believe that the source of that is the main source of that is a one-time transition to very different production systems in the Mid-South and the South. And so we'll have to monitor to see at some point that transition should be over, and then we'll be able to assess if there's a more general acceleration in trend yields. I have to say I'm very intrigued right now by the possibility that corn trend yields could be accelerating a bit. For what reason, I don't know. It's difficult to disentangle that convincingly, the weather versus trend yields and technology. But you can't deny that everyone's been surprised in August with how good the yields have been the last 5 years.
Well, in my like management, let's not forget management by the producers out there in the Corn Belt. A lot of, I think, investment in the planting window. A lot of tiling's gone in the last 10 years. New plant. I mean, there's just been a lot of management, I think, evolution with these new kind of varieties. And I think it's not all just the seed technology, in my opinion.
Yes, yes.
So I think if we are seeing an acceleration, a good part of that's just we got really good farmers in the Corn Belt and in corn and soybeans, and maybe some of those methods have been adopted in the Mid-South, and we're starting to see it's not all seed technology I just don't believe that fundamentally. I mean, it's there, but
no, I think that's a really important point to emphasize. So when you talk about trend yields, that that bakes in the effects of both of what we mean by technology, seed technology, the breeding and genetic changes in the corn and soybean plants, but it also includes management, better planters, more timely planting, more intensive management of diseases over the summer. There's a whole suite of those management strategies and investments that also affect your crop yields under the broad heading of trend yields. And it is very interesting that Todd and I have looked at some of the research from our colleagues in crop sciences, and in corn, there's actually at least some evidence that the rate of growth in the genetic or improvement in yield potential in the corn seed is leveling off, plateauing, and you're seeing these gains from yield in terms of management. Probably population increases continue to be a major source, and look what we saw.
Yeah.
There's a lot of discussion that maybe with financial pressures that farmers might cut back on seeding rates, and we might see a little bit pullback on population. There's no evidence that that's happened yet.
I didn't see that survey.
Yeah,
that's for sure.
All right, one question I want to get into clarification. Questioners wanted us correctly to point out that NASS actually gets 3 different yield indications from their surveys. They do an ag yield survey and an objective yield survey that yields 3 different indications. For the ag yield survey, which is from farmers, you get what they call a probability indication and a non-probability indication. And then the objective yield survey, you get a single objective yield indication. And NASS obviously has to weigh all 3 of these indications. I didn't get into that level of detail, but I would still argue that for the average person's understanding, it's most important to understand that NASS has effectively 2 main yield indications that they get, one from a survey of farmers and one from measurements they take themselves, what I call the ground truthing part of the survey. And they have to effectively average those things.
Well, I guess that's about it, right?
Well, we got 1 more minute. We just want to keep going. So do you foresee any grain storage issues due to the 2017 carryover of old crop? I think particularly in soybeans and the carries in the market is flashing some warning signs. The real warning signs about storage issues can be extracted from the market by looking at how close the spreads are to full carry. And as they get out to full carry, that's like a red warning light that we may have storage issues, and the market's going to need a lot of reward to get a big crop stored. And then all sorts of things happen when the market wants to value storage at higher than that 5-cent fixed rate. Yeah, it doesn't happen in the wheat contracts now because there's a variable storage rate system, and that's its own very controversial topic in the grain futures markets.
Yes,
so that's a great one to end on.
Yeah, we appreciate everybody tuning in.
Yeah, thank you. And remember again that you can go to our downloads page for FarmDoc webinars, and you can get the slides, and then later today or first thing Monday, the video of our presentation and this entire Q&A will be up for your reviewing pleasure. And thank you again, and have a wonderful weekend.